CO contains all of the functions necessary for controlling cost and revenue effectively. It covers all aspects of management controlling and includes many tools for compiling information for company management. Financial reports that are used for external reporting purposes, such as balance sheets and profit and loss or P&L statements, are created in FI. Similar to the various legal requirements set by relevant financial authorities, these external reporting requirements are prescribed through general accounting standards, such as Generally Accepted Accounting Principles or GAAP or International Accounting Standard or IAS.
CO consists of several components as shown in the figure. Similarly, costs from overhead cost controlling, CO-OM, and product cost controlling, CO-PC, can flow into profitability analysis, CO-PA, where, together with revenue data, the system can use these costs to calculate operating results, making it possible to establish how profitable the various areas are.
A controlling or CO area is the basic organizational unit in management accounting. It is a closed entity that is used for cost accounting. You can allocate costs only within a CO area. These allocations do not affect objects in other CO areas. An operating concern is the central organizational unit in profitability analysis, CO-PA. It represents the structure of external market segments for the enterprise. You can assign several CO areas to each operating concern so that you can analyze them together. A company code is an independent accounting unit. You prepare financial and profit and loss or P&L statements at the company code level to meet legal reporting requirements. You can use business areas or BAs to group strategic business units for reporting financial and P&L statements. BAs are not suitable for auditing. They are only suitable for reporting purposes. BAs can also group business units that are associated with different company codes. By assigning more than one company code to a CO area, you can perform cost accounting for all company codes. You can allocate values in management accounting that affect more than one company code. In cross-company code cost accounting, a CO area and its company codes can have different currencies. The currency of a CO area can be same as that of a company code. You can pass costs incurred in one part of the enterprise to another part of the enterprise. For example, you can allocate overhead costs from administrative cost centers to production cost centers. Production cost centers then allocate these costs to production processes. Within the overhead cost controlling CO-OM area, you can post costs to cost centers, internal orders, and processes from other SAP ERP applications, that is, external costs. Cost centers can then allocate these costs to other cost centers, internal orders, and processes in activity-based costing or ABC. ABC, in turn, can pass costs to cost centers and internal orders. Internal orders can settle costs to cost centers processes in ABC, and other internal orders. Central cost flows can exist between CO-OM and product cost controlling CO-PC. Cost objects, such as production orders, can receive direct cost postings from FI. Costs from cost centers, costs settled from internal orders, and costs allocated from ABC processes. The components of profitability accounting are also tightly integrated with CO-OM and CO-PC. Profit Center Accounting, or EC-PCA, receives statistical cost postings from all the other components of CO. In addition to direct postings from FI, profitability analysis, or CO-PA, can receive cost assessments from cost centers and ABC processes, settlements of costs from internal orders, and settlements of production variances from cost objects.
Data that the system creates in other SAP ERP applications can have a direct influence on CO. For example, if you purchase a non-stock item, the system posts an expense to the general ledger or GL. The system also posts this expense as costs to the cost center for which the item was purchased. This cost center can then pass these costs as overhead to a production cost center. FI in the SAP ERP application is a primary source of data for CO. In fact, most expense postings in the GL result in a cost posting in CO. These expense postings to the GL can be journal postings, vendor invoices, or depreciation postings from asset management. Sales order management is a primary source for revenue postings from billing documents to revenue postings in CO-PA and EC-PCA. Human Capital Management, or HCM, can generate cost postings in CO. HCM gives you the opportunity to allocate labor costs to various controlling objects. In addition, you can transfer and use planned personnel costs for planning in CO. In Materials Management, or MM, a goods issue transaction can create a cost posting in CO to the specified cost object. The system creates product cost estimates in CO that can update price fields in Material Master Records. Finally, purchase orders in MM can generate commitment postings within CO. The manufacturing area of logistics also works closely with CO. Bills of material, or BOMs, and routings can be used in CO-PC. When the system creates an FI document that posts to an expense or a revenue account using a corresponding cost element, the system also creates a controlling or CO document. Each CO document has a unique number and contains the following details: the CO object that you posted to, the cost element that you used, the amount that you posted. In the example shown in the figure, the FI document debits the P&L account and credits the balance sheet account. The CO document debits the CO object by using the corresponding primary cost element of the same CO document number. There is no corresponding credit entry in the CO document. When a primary cost is initially posted in CO, it is treated as a one-sided journal entry, unlike a conventional balanced FI journal entry. Note, any transactions that create cost movements in CO are balanced entries. When the system moves a cost from one CO object to another, such as from one cost center to another, the system credits the sending object and debits the receiving object for the same amount. Cost and revenue postings to CO can result in true or real and statistical postings. You can settle true postings with other CO objects. Statistical postings are for information purposes only. True objects can act as sending or receiving objects during cost allocation. Examples of true objects include cost centers, real internal orders, real projects, networks, make-to-order production orders, cost objects, and profitability segments. Statistical objects cannot allocate costs to other objects, but you can make a statistical account assignment to any number of cost accounting objects. Statistical objects include statistical orders, statistical projects, and profit centers.